Should you use a home equity line of credit to pay off your mortgage? Here's my thought. So I sell home equity lines of credits all day, okay? What I do caution my customers who are looking to use a home equity line of credit to pay off their mortgage is the interest rate on a HELOC is variable. It can fluctuate and it can change. If you have a fixed rate on your mortgage, you need to look at the actual interest rate to see if it's even beneficial. If it is a super low rate that you obtained back in 2020 and it's like 2.5%, do not touch that interest rate on that mortgage. Mortgage rates right now are well above 6. So that doesn't make sense in order to pay off your mortgage. Now, if you're just looking for some cash out, and you don't want to refinance, a home equity line of credit is wonderful. Again, the rate, it is variable, but it depends on what you're trying to do. Are you trying to do a project around the house? Are you trying to consolidate debt? Your home equity line of credit is tied to the prime rate. Okay. The prime rate is 8.5% all around the country. It is set by the Federal Reserve Committee. They control the prime rate. They meet about 6 to 8 times per year and they determine, hey, are we going to leave it at 8.5%? Are we going to increase it a quarter? Increase it 0.5%, decrease it, or just leave it alone? They have those options. Once they change the prime rate from 8.5%, it depends on your margin. So the prime rate is here. Your margin can be either above or it can be below, depending on credit and income and the value of your property and the amount that you choose for a line amount. Also, details about a home equity line of credit is it is open for you to use and reuse. It's called revolving. So you can use it, pay it back, use it, pay it back again continuously for a set term. The particular terms that I offer is 10 years. So you have 10 years that you can use a home equity line of credit as long as you are making at least the minimum interest payments on what you have withdrawn. Say, for example, you open a home equity line of credit and it's $50,000 and you only want to use $10,000. You are only charged for the $10,000 that you've used. The other $40,000 sits in the account. You're not being charged, just charged on the $10,000 that you've used. If you decide you want to pay it all back, you can during the first 10 years without a penalty, and there's no early closure fee with our bank if you decided to close it down. Other banks are different. Some banks may say, hey, there is a 3-year requirement that you need to keep this thing open. If you close it, we're going to charge you $350. Other companies may say, hey, you need to do an initial draw amount every year and use it every year. It depends. Do your research. But when it comes to paying off your mortgage, I would tread lightly with that because right now the rates for the home equity lines of credits are certainly much higher than traditional mortgage rates. So that's something to consider. My name is Camille. I am a licensed loan officer. If you are not following me, go ahead and hit that button and come back because I'll be putting out more content. All right, y'all.